Hello traders and welcome back to the Forex Geek. Today we'll delve into advanced support and resistance techniques that can significantly enhance your trading strategy. So understanding these concepts is crucial for identifying key price levels where the market may reverse or continue its trend. So by mastering advanced support and resistance, you can make more informed trading decisions and improve your overall. Stay tuned until the end as we would cover practical strategies and tips that you can apply to your trading right away. So without wasting your time, let's get started. So first, let's understand advanced support and resistance. But before we get to the advanced part of support and resistance, let's understand what support and resistance is in the first place. So support and resistance form the backbone of price action trading, but their advanced application goes far beyond basic horizontal lines. So when you talk about support and resistance, you will normally think about levels where price has reacted before, and it's expected that price should still react to those same places as it means that price like creating a barrier, and it's expected price should respect that barrier it has created. So this is the normal support and resistance. When you understand these concepts at a deeper level, you notice that price reacts to these levels in complex yet predictable ways. So think of support as a floor where buyers consistently step in. Let me find a support example. We've seen the resistance. This is a support. And support is like a floor where buyers consistently step in, creating a barrier that prevents prices from falling further. And resistance acts as a ceiling where sellers repeatedly enter the market, making it difficult for prices to rise above that level. And that's the basic support and resistance. However, in advanced trading, these levels are not just static lines like this. We'll get to the advanced part. Let's just talk about support and resistance, because in advanced support and resistance we are not just looking at the lines, we are looking at more of zones and a combination of structure, understanding strength. When multiple technical factors converge at a single level, such as price swing high or a major moving average and the Fibonacci level, or a combination of all these points form a zone that becomes significantly more important for your trading decisions. So the most crucial aspect of advanced support and resistance is understanding that these levels are not exact prices, but rather zones where prices typically react. Professional traders look for these zones and plan their entries and exits accordingly, often using additional confirmation signals before taking trades. So remember, advanced support and resistance analysis requires you to consider market context, volume, and previous price action. So these elements combined create a more reliable trading approach than simply drawing horizontal lines on your chart like this. I'll look for more lines. You can see this is considered a basic support and resistance. That's a basic support level. And let me look for, this is a basic support level. You can see price fell into fall. This held price from falling significantly lower, and this is a resistance level. You can see price couldn't go higher than this. It tapped it once here and the second time here, and it's expected that this third time it should not go above this line, and this is used as a resistance level. And you can see price falling after that. But now we're going to talk about the advanced support and resistance levels, which is a combination of multiple factors to get zones, particular zones where price is expected to react from. So let's talk about types of advanced support and resistance. So when it comes to advanced support and resistance, it's essential to recognize the different types that can influence your trading decisions. So each type serves a unique purpose and can provide valuable insights into market behavior. So the first is horizontal levels, like we've discussed. Horizontal levels are the most basic form of support and resistance. These are price points where market has previously reversed direction, and they are easy to identify on the chart and can provide clear entry and exit points. So this is another one. This is a good resistance zone right here. And why horizontal levels are fundamental, their effectiveness can diminish if they are tested multiple times. The more times a level is touched, the weaker it becomes. Understanding this concept helps you gauge when to trust these levels in your trading. You can see price invalidating this resistance level right here, sweeping it. You can see price giving us this very aggressive sweep of this resistance level, this major resistance level here. So let's talk about another type of advanced support and resistance level is dynamic support and resistance, and this has to do with support and resistance levels that change with price movements, with moving averages such as the 50-day or 200-day moving average. So I'm just gonna add the moving average to this chart, and we're gonna see the dynamic support and resistance. So I'm just gonna add the moving averages. Simple. And I'm gonna add the 50-day. I'm gonna set it to the 50-day moving average. So this is the moving 50-day moving average, and it's expected that we use this as dynamic support and resistance level. You can see price currently giving us this using the moving average, the 50-day moving average as resistance, failing to go above it, using it as resistance. You can see this went above it, but we continue to fall. Price continued to give us the push to the downside, using it as resistance for further sells, and it can go on and on and on. This is another one. You can see price failing to go above the moving average, giving us a consistent push to the downside. So you should always look for trending markets before you use the moving average as support and resistance level, because in ranging markets it can be really choppy. As you can see here, price was giving us these zigzag movements, and you can see that's a ranging market. So it's best to use it in clear trending markets like this, so that it can work for you better. And dynamic levels are particularly useful in trending markets, like I said, and they can guide your trading decisions more effectively than static lines. So that is a little bit more advanced than the normal horizontal lines. Now the next advanced support and resistance levels is Fibonacci retracement levels. So Fibonacci retracement levels are another advanced tool for identifying potential support and resistance levels. So traders use these levels to find areas where price may reverse after a pullback in a trend. So key Fibonacci levels include the 23.6%, the 38.2%. As you can see, this is the Fibonacci tool, and the 50%, this is the 1.8%, and the 100%. So after a significant move, you should place your Fibonacci tool from the low of that move to the high, from the swing low of the move to the swing high, and price is expected to react from these levels I just called. You can see price reacting from the 61.8 percent, and using that as your support level for we had this push to the upside. So we use this Fibonacci level as an advanced support level, other than the normal regular horizontal lines, and for using the horizontal lines for support and resistance. You can see price reacting off the 78.6% level right here, and using it for resistance for that sell, a massive sells to the downside. And Let me check for another example. You can see this one here had this from this swing high to the swing low, and you can see price reacting off the 61.8% level. Zoom in a little bit so that you can see that this is 61.8% level, and you see price reacting off of that. You see multiple candlestick patterns. You can see there's a evening star candlestick pattern right there, and after that you see this massive sells and bearish activity, a bearish momentum, and that is how you can use the Fibonacci retracement levels for support and resistance levels. So the next on my list is trend lines, and these trend lines are drawn by connecting higher lows in an uptrend or lower highs in a downtrend. So I'm just gonna, you can see this. So higher lows in an uptrend or lower highs in a downtrend. So this is an uptrend, and you can see multiple touches. First it has to be like 2 touches, then you extend it from there. Say the first 2 touches, then extend, and you can see price reacting off these levels in subsequent trading times. You can see this price refusing to go below this level, instead using it as support levels and pushing price upwards. Just look for another example. Now this is perfect. You can see first you should check for the price touching the trend line twice, and you can see the first one here, the second one here, and it's expected that price shouldn't go lower than this level, and the price came back here and gave us this reaction for that push to the upside, and this was just a minor uptrend that lasted for about 10 days. This is another uptrend. You can see this. Remember, for uptrends the trend line should be lower the higher lows, and you can see this. First we'll have the first one here, the second one is expected that price should respect these levels. Just gonna adjust this. So it's expected that price should respect this support level and shouldn't go below it. So that is your using trend lines as support and resistance levels. This is another one. You can see price reacting to this level right here. Using this as support levels. Before we had this breakout and the retest, which we are going to talk about in the next section. So understanding these various types of advanced support and resistance allows you to create a more comprehensive trading strategy. By combining these elements, you can better anticipate market movements and make informed trading decisions. So let's talk about trading strategies using advanced support and resistance levels. So the first is the confluence strategy. Now, one of the most powerful ways to trade using advanced support and resistance levels is by looking for confluence. This means identifying areas where multiple technical factors align, such as a horizontal support level, a trend line, and a Fibonacci retracement. So when several tools point to the same price zone, the likelihood of a strong reaction increases significantly. So let's look at the chart. You can see this was a trend line, and we had this breakout, a failure of this zone. And if you remember, this was you can see this support level, price holding twice. Price failing to break through this line the first time. See price, we had this first time, the second time, and that was a support level, but price violated that support level, and you can see we use that as resistance in the next like support turn resistance exactly. So and let me look for a better example of the confluence strategy. Okay, you have this as a major support level, a major resistance level. I mean, you have this as a major resistance level with price failing to go above that level. And if you put your Fibonacci from this swing high to swing low, you can see that this support level falls in line with the 78.6% ratio. We're going to make this the swing high, and you can see that it falls perfectly with that level, and it's expected that price should react from that zone. And you can see price as we go to that area, you can see the reaction. And if you have your, let's use the moving averages to explain better. You can see this is the moving averages, and if you put your Fibonacci tool from here, from this high to this low, you can see price retracing to the 61.8% level around here, and it's also close to the moving average and giving us a push to the downside. So this is a confluence using two or more technical factors to know if a trend or a support or resistance level is likely to hold. This is advanced support and resistance trading. You could use another Fibonacci from here, and you can see price reacting of the 78.6% Fibonacci ratio there. I'm just gonna delete that, and you can see price giving us, after that you can see price giving us a push to the downside. And this was a major support resistance level right here. It's expected that price should keep on respecting it. As you can see, even though the moving average was falling, but this level is a well-known resistance level, and price kept on respecting it in this ranging market. So that is one way you can use multiple technical factors to trade the confluence strategy. So the next is the breakout and retest strategy, and this we've covered a little on it, but let me go deeper. So the breakout and retest strategy, they are common in trading, but not all breakouts are reliable. The advanced approach is to wait for a breakout and then look for a retest of the broken support or resistance level. So when price retests this level and holds, it provides a clear entry point with better risk management. You can see this this was a support a resistance level right here, and price should have held this level, but price broke it, and now we should be looking for a retest of this level. And as you can see here, we had the retest. Price respected this level, gave us multiple candlestick reversal patterns. If you are not familiar with that, you could go watch, we've done a video on that. And this is a hammer right there, and it's expected that price should this is a tweezer. I see the tweezer bottom right there. It's expected that price should start giving us a push to the upside. And if you check, this was supposed, we are in a downtrend clearly here. You can see, remember we just talked about the trend lines, support and resistance, and price was expected to hold, but price broke this, and we have this pullback into this support resistance turned support. This was supposed to be a major resistance based on the trend line, and also based on the normal horizontal resistance levels, but price violated it here. Had this retest and had the shooting star candlestick pattern, had multiple retests actually, and we even had another retest of that same price level. Remember, the more price retests the level, the likely is going to break or fail, and the next time, as you can see, price failed here, and that support level failed right there. And let's look for more examples. You can see this is another one, and see price holding for that support level, and supposed to be a support level. We held it once here, twice here, and a third time, but it failed, and you can see it was used as resistance. And this was our another example. You can see price holding this was supposed to be a support level. Remember, support levels have to be seen as zones and not just horizontal lines. And as you can see, price held here and here 2 times and is expected to hold again, but that resistance was broken and it turned support. This is the break and retest strategy. Turned support and you can see price giving us the push to the upside. So that is basically it. And this is another one. You can see we had this push to the upside, price failing to go beyond the zone right here. So it's expected that we should actually respect this resistance zone, but price violated it and we had this retest. So this is a very perfect breakout and retest. You can see we are bullish and it's expected that this support level should hold, but it failed and we had the retest back to this area and a push to the downside, and that is your breakout and retest. For those that like to use the horizontal lines, you can see this is a very clear one. Price was holding here, or let me just use the zone. Price was holding here and we thought that this was still gonna hold, but it failed and it's expected that it should retest this former support zone, and you can see it tested once here and another here, and that is your breakout and retest strategy. So it's expected that you should trade the support and resistance as zones and not as exact price levels. Price often fluctuate between within these zones before designing on its next move. So by treating them as zones rather than rigid lines, you can avoid being stopped out prematurely and improving your trade accuracy. So, and the last trading strategy should be the dynamic support and resistance with moving averages. We've already talked about this when we were talking about types of advanced support and resistance levels. It just involves using moving averages as dynamic support and resistance levels in trending markets. So for instance, in a downtrend, as you can see, price may repeatedly drop off the 50-day moving average, as you can see right here, before continuing lower. So by combining moving averages with horizontal levels or trend lines or the Fibonacci, as we previously did, we combine the moving average with the Fibonacci right here. So you should be able to catch some potential good trading opportunities with that. You can see this trend line and it also corresponds with the moving average, using it as resistance levels. And just look for a few more examples before we wrap this up. And price was just using this as support levels. This is a very good trend line, touched here once, twice, and it's expected to hold, and it held here. So another thing to look out for is the failed breakout strategy. As you can see here, we broke out of this moving average, and you should know that some breakouts leads to trends. Some fell and reversed quickly, like this one here. So this is where the failed breakout strategy comes into play. When price breaks out of a key level or this dynamic support or resistance, but quickly reverses back inside the range or zone, it signals that the breakout was weak, and you can take advantage of this by entering in the opposite direction. That's exactly what happened here, and it corresponds with the trend line, and we are basically bullish at this point. So, and we had another trend line here showing that we should be looking at the potential bullish moves until we broke it and turned bearish, and you can see price respecting that dynamic support and resistance, which is the moving average, the 50-day moving average, and it just continues. So that is how you can use the moving average in your trades. So Alright, traders, we've come to the end of today's video. If you found this video helpful, please hit the like button and subscribe to the channel and turn on notification bell so you don't miss any future updates. Thanks for watching, and I'll see you in the next one.